Hey guys, Koukun here, coming at you with another video about investing. And today we're going to talk about how you can invest into index funds. So if you watched my last video, I love index funds. It's a great way to invest into the broad stock market, the bond market, while paying very low fees. Amazing for long-term investment if you want to have it in a liquid investment that will grow slowly over time. Now, how do you actually invest into index funds? So one of the great things about index funds is you can actually put the money through your RRSP, through your TFSAs, and we'll talk about those in some future videos, but basically they allow you as a Canadian to invest into the stock market or bond markets without paying taxes. So the tax-free savings account, any money you put in there, when it grows, you don't pay taxes. The RRSP, when you put money in there, you get a tax deduction. And then when you take it out later, hopefully in retirement, you pay whatever tax at that time. So you defer the tax for that period of time. How do you invest into an index fund? Right now in Canada, unfortunately, we don't have that many great options. It's a little bit of a complicated process where you need to open a stock trading account and then buy shares of the index fund. Right now, the two best ways to invest into the index funds would be through these two companies. One is Wealthsimple Trade. Important to remember trade. Wealthsimple has a mutual fund arm of their company, which again, they have a little bit less fees than the traditional one, I believe, but it's still in the 1.5% range is my understanding of it. And again, I'm not a huge fan of those. So I would stick more to their Wealthsimple Trade, where you can buy individual stocks or you can buy individual index funds. I don't believe in buying individual stocks. I don't think that's a winning proposition for most individual investors. I rather prefer buying the index and just getting the benefit of the broad market. When the market does well, you do well. When it goes down, yours goes down, but at least you get the market return over long periods of time. So Wealthsimple Trade is one option. The other one is Questrade. Questrade also is a stock brokerage. Questrade allows you to buy individual stocks at a fee. However, they're nice enough to allow you to buy index funds through a category called exchange traded funds. They're able to allow you to invest into index funds without any fees. You only pay a $5 fee, I believe, when you sell, and you can sell as much as you want in one go. So I like this because you can put $100 every month or whatever you decide to contribute, and you don't have to pay a $5 fee every time you buy. But when you sell, maybe you've built up a lump sum, you're taking it as a down payment on a house, maybe you've contributed throughout your working life and you're taking it out at retirement. At that point, hopefully you built up a good nest egg, so when you're selling, you can do so in larger amounts so that you don't pay as much in fees. So Questrade, Wealthsimple, I'll leave some links below where you can get access to that. In terms of the actual index funds to invest in, here's the best options that I have helped my parents invest into and that I'm investing into as well for the funds that I'm setting aside for index funds. Now, keep in mind, I'm a heavy real estate investor. Most of my net worth, most of my savings is in real estate because I believe in real estate. I'll do another video later talking about when it makes sense to invest in index funds, when it makes sense to invest in real estate. But just keep that in mind. The index fund portion of my investing is a very small amount at this time, but I do believe it will grow over time. The first index fund is VCN. It is the Vanguard Canada All Cap Index ETF. So this invests in the 196 largest companies in Canada. It has an expense ratio, so their fee is 0.06% compared to the average mutual fund, which is 2 to 2.5%. So 0.06 compared to 2% or 2.5%. So very low fees, and it pays a dividend in the range of 3 to 3.5%. This will change, right, with the whole COVID-19 situation. If companies start cutting their dividends, maybe that will go down. Once things recover, if companies start increasing their dividends, it'll go up. So that will fluctuate, but as of right now, it's in the 3.5 range. So that is how you can get exposure to the Canadian, like most of the Canadian companies, by owning tiny pieces of those 196 companies. If you want to get exposure to the American companies and the American stock market, which I would recommend, they are one of the largest entities in the world in terms of collection of companies. You get very good diversification by owning the American stock index. I would recommend VFV. These are all Vanguard funds. You can also look at BlackRock. They also have index funds here in Canada through iShares is the name of their division that sells index funds. You can look at that, but my preference is Vanguard. And with the VFV, that is the S&P 500 index. Basically, if you know the S&P 500, it's the 500 largest American companies. It makes up about 70% of the value of the American stock exchange, those 500 companies. And through this index fund, you get a little piece of those 500 companies. The expense ratio is a little bit higher, it's 0.09%, and their dividends right now are in the 1.7% range. The one thing to keep in mind, VFV is in Canadian dollars, but you're owning US dollar companies. So if the US dollar goes stronger than Canadian, your investment will actually show up as doing better. And if the US dollar goes down relative to the Canadian dollar, your investments may actually go down even if the market is doing well. This is what we call currency risk, which we can talk about in another video. But anyways, that is getting exposure to the US market. The other thing to keep in mind, if you hold a share of VFV, because it's investing in American companies, if you hold it within your TFSA or your tax-free savings account, there is a 15% withholding tax that the IRS, basically the CRA of America, will withhold of your dividends. And this is sort of an American rule. However, and even if you hold this in your RRSP, because it's in a Canadian dollar index fund, they will still hold that 15% withholding tax. Now, the next option is if you already have US dollars specifically in your RRSP. I don't recommend paying for currency conversion to change your Canadian dollars to US dollars, but if you already have US dollars, this is another option for you. It's called VTI. So VTI is basically the Vanguard total stock market. It owns 3,535 stocks in America. So a little piece of all the companies in America that are on the stock exchange. The reason I like this, their expense ratio, especially in America, because they have large amounts of funds, is 0.03%, which is really low. And it pays the full dividend of 2% versus the Canadian one is 1.71%. The reason why there's that difference is if you hold US denominated investments in your RRSP, the IRS does not have a 15% withholding tax. I hope that wasn't too complicated or I didn't get into too much details there. But basically, Vanguard is the index fund company that I like to invest my index funds through, right? They are the company that I like to support. The two companies that allow you to buy these index funds are stock brokerage accounts are Questrade and Wealthsimple Trade. Currently, those are the two options that have no fees on the purchase. And then the three indexes that I actually invest that Vanguard has created are VCN, which is the Canadian stock market, VFV, which is the American S&P 500. And if you already have US dollars in your RSP, I would consider VTI. So I hope this was helpful to you. This is getting a little bit more into the index fund investing. And in my next video, I'll talk about why I like index fund investing, why I like real estate investing, and how these two can actually work well together for the average investor trying to create some wealth and retire. Hope you like it. Until next time, all the best.